This video is based on the technical analysis of USDTRY, which is the Turkish Lira. And what we're going to do is analyze this particular currency pair from the monthly chart and all the way to the H4 chart ahead of NFP, which is also known as non-farm payroll. And so guys, let's not waste any further time and get straight into the actual technical analysis. And as I said, we are on the monthly chart, and on the monthly chart we don't really see much of interest, although we can see that the market is in an upward trend, right? And in fact, we actually have a very steep trend over here, and this tells us that because of this gradient, chances are that over the next couple of months probably we are going to see a reversal of sorts, right? We are going to see price crash somewhat due to the fact that we have a very steep gradient in as far as this channel is concerned, right? But what else do we see in regards to the monthly chart? On the monthly chart, we also have these two candlesticks over here. We have this one, which is a bearish candlestick, guys, which has quite a small body and quite a long lower wick. And we have another one here as well, as you guys can see. And what these two candlesticks tell us is that we have a lot of liquidity stuck right at that bottom, and we all know that the markets will always go to where the liquidity is, as liquidity is money that needs to be triggered by the market at one point or another, as I always say. So what I'm saying in other words is that in the future we will see price come back to this level and then again to this level to trigger all of that liquidity, right? Anyway, what else do we see in regards to the monthly chart? I don't see much. So what I'm going to do is head down to the weekly chart, and here we are on the weekly chart. On the weekly chart, the first thing that I can see is that the market has given us what seems to be a gap over here. Gaps are very much similar to these liquidity candlesticks in that they also carry a lot of liquidity at that point, and this also tells us that in the future we will see price come back to this level to fill that gap. The only issue is we don't know exactly when this will happen, but nonetheless it'll happen at some point, right? And what else do we see, guys, in regards to the weekly chart? Let me just zoom in and let's have a look, right? So on the weekly chart we have what seems to be a very nice W formation over here, right? And it has a neckline more or less at that point. And as I always say, guys, whenever we have these formations such as the W formation or double bottom, we want to see price actually closing sufficiently above the neckline and then come back to the neckline to test it. And at that point where the neckline is normally where we look for those potential buy opportunities, especially if this level, which is the neckline, is or rather aligns with any key numbers that we have in regards to the Fibonacci retracement tool. In fact, let me just actually utilize Fibonacci just to see if that neckline actually aligns with any key numbers that we have on the tool. So just bear with me, guys. Let's have a look. Let's have a look. I would have it in this manner, and we can see, guys, that in regards to this double bottom over here, which has a neckline at that point, the neckline we could say aligns with the, or rather with both the 50% as well as the 61.8% Fibonacci retracement levels, right? So what this means is that should price from where it is come back all the way to where we have that neckline, right, just over here, at that point is a very good area to be looking for potential buy opportunities. Why? Because number one, remember, we have, if I can just draw it, this double bottom or W structure, which has a neckline at that point. Not only is this area the neckline of that W structure, but it is also excuse me, a strong level of support. And we said it aligns with two key numbers that we have in regards to the Fibonacci retracement tool, right? So should price come back here, this would be a good area to buy, right? Number one, we have, as I said, that a very strong level of support. Number two, we have this level also being the neckline of this W structure. Number three, we would have also price come back to where we have those two Fibonacci retracement numbers, right? So that would be, or rather this area would be a good area to be looking for those potential buy opportunities, right? Anyway, to add to that, just also bear in mind that we have this candlestick, as I said, it's also very much a level of liquidity, and we have a lot of money stuck here. And as much as I'm saying that should price come back here, we should be looking for potential buy opportunities, it is also quite possible that the market may reject this level and push further down to around this level to trigger that liquidity and only move further up, right? Anyway, from here, let's move down to the daily chart. And just to recap, remember guys, on the weekly chart, we spoke about how we have this W structure which has a neckline at that point, and we said ideally we want to see price come back to this level, and at this level is where we would look for those potential buy opportunities. We also spoke about how we have that candlestick over here that's carrying all of that liquidity, and that as much as I'm saying that at this point we should look for potential buy opportunities, it is also quite possible that the market may move further down to trigger that liquidity and only move further up, right? But here we are on the daily chart, and let's just zoom in and see what's happening. On the daily chart, we can see that the market has been issuing a lot of spikes to the bottom, right? And in my very humble opinion, I would say that all of these spikes actually stop hunts, right, for liquidity, and we have been seeing the market move further up, right? But what else do we see in regards to the daily chart? At this point, I don't see much really. So let's head down to the H4 chart and let's see what's happening down there. And let's have a look again. On the daily chart, we spoke about how the market has been giving us all of these spikes, and I said that these spikes for the most part are stop hunts, right, and liquidity grabs. But on the H4 chart, we have what seems to be a very nice double bottom again, and don't confuse this double bottom with that double bottom we spoke about on the daily chart, right? And the same principles apply, guys. Whenever we have these, as I always say, we want to see price closing sufficiently above the neckline and then coming back to the neckline to test it, and at that point is where we look for those potential buy opportunities, especially if the level aligns with any key numbers that we have in regards to the Fibonacci retracement tool, right? So again, I'm just going to utilize Fibonacci and let's have a look if that neckline aligns with any key numbers. Just bear with me, guys. Let's have a look. Let's see, more or less. And again, we can see that we do indeed have some numbers over here where we have the neckline of this W formation that align with, you know, Fibonacci, and should price from where it is come back to that level, again we would look for further buy opportunities. And guys, again, we're not just going to buy, we're going to look for reasons for why at that point we should consider looking for buy opportunities, right? But just also keep in mind that on the H4 chart we also have this candlestick, right? Another one is here, right? Another one is here, right? Let's have a look. We have another one there, right? And as I said, guys, all of these candlesticks are liquidity candlesticks rather, and they are carrying a lot of money at the bottom where those wicks end. And as I always say, guys, the markets will always go to where the money is. So as much as I'm saying that at that point where the neckline is of this W structure, we should consider looking for buy opportunities, right? It is also quite possible that we may see the market move further down to grab some of those liquidity points before actually again moving further up, right? But for the most part, just to go back to the daily chart, right, for the most part, I believe that we should be looking for potential buy opportunities because we are at the end of the day in an upward trending market, right? We are in an upward trending market, and at this point I don't really see any signs of the market actually moving further down, right? Just one thing that I want to mention in closing, just remember that we have this double bottom over here and we have another smaller double bottom at that point, right, on the H4 chart. So don't confuse these two points over here, right? And that's it as far as my analysis goes, and peace out.